Bill Ackman's SPAC, PSTH, has just been hit hard and is now trading below $20 per share. We need to talk about how we got here, the lawsuit, the escape plan, and I'll also share what I'm doing with my position. Let's do it. What's going on, everybody? My name is Matthew, and today we are talking all things PSTH. And again, the format is first how we got here, then the lawsuit and Bill's next plans, and finally my plan and what I'll be doing just in case you're curious. Pershing Square Tontine Holdings, or PSTH, is the biggest SPAC in history. It was being led by none other than Bill Ackman, a big name on Wall Street, who has had some massive, respectable wins, but also some shady and perhaps less respectable wins and losses. Because the SPAC was so large, many rumors spread of Bloomberg or even Stripe being their acquisition targets, and this brought a lot of hype and interest to PSTH. However, in hindsight, those didn't really make much sense because Stripe, for example, if they wanted to go public, probably would have gone the IPO route, and they probably didn't even need to go public because they have such access to capital with the VCs in the private markets. Anyways, about 8 months ago, I made a video discussing the new SPAC and the asymmetric opportunity that I saw in front of us. And it sure is a good thing that I added the word might in the title and made sure to put a question mark in the thumbnail too. Jokes aside, in this video, I outlined the SPAC and its details and also how I saw this as either losing about 10 to 15% or potentially gaining 50% or even doubling our money. To me, I didn't mind those odds. And we actually did see over 50% gains on this one at one point during its peak in February. But I believe this was before any major rumors of any big deals, and it was simply probably riding the wave of early 2021 when a lot of growth, spec stocks, SPACs, innovative stocks, and risk-on plays were thriving. Since then, it has cooled down, but not before trying to acquire a 10% stake in Universal Music Group, or UMG. This is a pretty complex deal that the market did not like one bit, and the stock responded quite poorly. But the deal also ended up falling through. And now, after a month of continuing to drift lower, here we are at the lawsuit. Two professors, one of them a former SEC commissioner, have sued PSTH on the basis that it was acting as an investment company rather than a SPAC or operating company. You see, despite the fact that both professors in this lawsuit probably fully understood why PSTH would do this, they said they did not like the fact that PSTH invested its IPO proceeds, or basically all its cash, in short-term treasury and money market funds that own short-term treasuries. Now, nearly every SPAC does this as a way to store their cash while at least trying to earn some sort of interest on it, although barely any. If none of that made sense to you, do not worry. Another really easy way to explain that is the two professors said, hey, PSTH, don't touch your cash, don't put it anywhere. PSTH is like, oh, but I want to earn at least a little bit of interest on it, and I'll put it in this really, really safe place in short-term treasury bonds just so I can make a little money while I'm looking for a deal. And they're like, nope, that counts as an investment. You're no longer a SPAC or operations company. You're now actually an investment company, and therefore you should be governed and regulated by a different set of rules. And the two professors seem to go after PSTH because it's the biggest one. It's probably the one that's going to catch the most headlines and get the most publicity for what they're trying to do here, because they do plan to expand this lawsuit to other SPACs as well. Now, not only would changing all the rules and regulations for SPACs kind of put a damper on the whole space in general, but also PSTH only has 11 months left to try and get a letter of intent for an acquisition target. And after that, if they can get that, they have 6 months to close the deal. And yes, it can be extended by a vote of PSTH shareholders, but even then, this lawsuit could scare away potential merger partners if PSTH is still wrapped up in all this uncertainty for a long time. So Bill Ackman's solution was to first call PSTH a leaky boat and then create something completely different, which they were already going to create anyways, called a SPARC. So with this new thing, this SPARC, as a PSTH shareholder today, you would receive $20 for every share of PSTH you have, and also one SPARC warrant for every share of PSTH you have. Those SPARC warrants give you the ability to buy into SPARC's future merger transaction at a share price equal to SPARC's cash net asset value per share. In other words, the warrant is only exercisable once a merger is confirmed with the SPARC. And if SPARC pops 10% on the announcement of a merger, it's okay, because if you have the warrant, you'll still be able to get SPARC at $20 per share or whatever the floor or redeemable share price is. They're basically just saying like, hey, okay, we'll give you your money back for PSTH. Now hold on to this kind of coupon and you can't redeem it until we find a target for SPARC. And once we find a target for SPARC, no matter what the price is after the announcement and everything is made, you can come use that coupon, the SPARC warrant, and redeem it for shares of SPARC at the redeemable share price of what is probably going to be $20 per share. And that's actually kind of cool with these warrants, because for most warrants on SPACs that trade, with $10 as their cash net asset value per share price, a lot of the warrants are redeemable at about like $11.50 or have a bit of that premium, whereas these SPARC warrants have no premium on top. Now, if you do like the SPARC solution, and if I was able to explain it in a way where you could understand it, and I hope I could, there are still a few things standing in your way. First of which is that it still requires PSTH shareholder approval. Second, it would need to be approved by the SEC. And third, it would require a rule change at the New York Stock Exchange. So what will I be doing with my position in PSTH? So this is my position in PSTH. We're down about 19% here. It was never a huge position in my portfolio or relative to my money in the stock market. And that's because it was kind of a blind trade. It was based on risk reward, that asymmetric risk, because I didn't know who their target was going to be. Now, that said, personally, I will most likely sell my PSTH shares for a loss here. And as of posting this video, I have not yet sold a single share, and I do think that is worth mentioning because I obviously cannot move PSTH, but I know a lot of people watched my video and may have gotten the idea to invest in PSTH from that video. Hopefully they didn't just do it blindly because of the video, but rather it served as a launch pad for the research. That is my hope. But I at least wanted to give you guys a fair warning before I make any moves. And of course, everyone in the investor community will know exactly when I do it and my full reasoning why. But this is most of my reasoning why. Right here, as follows. Ultimately, I was simply wrong about this one, but the great thing about investing is you just have to be right more often than you're wrong, and hopefully your wins far outpace your losses. And that's where position sizing and risk management and portfolio diversity and all that stuff becomes really, really important. I also just don't want my cash to be tied up here any longer, as this is all getting quite messy, and the new SPARC arrangement is not even guaranteed. As previously mentioned, it has to get through shareholder approval, SEC approval, and an NYSE rule change. And even if Pershing Square is able to get SPARC in place, who knows how long it will be before they find an acquisition target. It's been about 8 to 9 months since I initially invested in PSTH, and they did find a target. However, the market did not like the way it was set up at all. Now, we'll never really get to see, I guess we might be able to get to see if Ackman had something beautiful planned or if the market was right in its reaction. But either way, I think the opportunity cost here is too great to keep it in PSTH, and I'd rather have that cash for the reasons outlined in this video right here, where I think we could see a potential correction coming up in September. And if we do, I would love to have more cash on the sideline to buy up some opportunities, because I've been relatively inactive on my buys lately as I'm waiting for things to continue to try and find their bottom. Now, if you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, and check out our quote of the day. You might just learn something. Make sure to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. And download Hungry Bull, a finance app for iOS and Android with a lot of really cool features that'll be in the description below. Check out Investor Community. And if you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous.